Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Programmatic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I in Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor. Call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And I'm going to share my screen. While I'm sharing my screen, if anybody's joined us for the first time, Will and I, we do this show in the mornings to help answer any questions you may have about the Market Chameleon tools, data, or analytics. If you want to come on a show and ask your question live, we provide a link to Zoom on that live chat. Click on that. It takes you over to Zoom. Once you're in Zoom, there's a button there, raise your hand, click on that. Once we let you in, you can ask your question live, direct. If you prefer to type your question in, you can do that in the chat box. Will's watching it. He'll read it back to me. While we're waiting for more people to join us, questions to queue up, we'll take a look at the pre-market report to see if we could get insights on stocks that are trading in a pre-market hours. And here we're going to start out with our list of most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to come down here. I see 44 stocks made our percentage gainers list, 40 on the decliners. And from this perspective, we're looking like we're setting up for, actually a neutral opening. No real big bias there. But if you look at this list, you'll notice that there are a lot of small cap stocks in there, ETFs, leverage products, closed-end funds, anything that's listed on the major U.S. exchange. If it's trading at pre-market hours and meets our threshold, it could make this list. And what we want to do is narrow down this list to a smaller group of stocks, see if we could get some more insights. And to do that, I'm going to use the filters here up top. And let's use this one in ETF. When you click on the filter, it gives you a drop-down menu to select from. So you could see there are some broad-based ETFs in there, some sector ETFs. Let's click on SPY, which is the S&P 500 ETF. When you click on that, the list below will get filtered by stocks that are holdings in the SPY ETF. In here, we see 4 stocks made our percentage gainers list, 7 on the decliners. From this perspective, slightly bearish bias at the open. Lists aren't that big, but I know that we still have lots of earnings coming out. I think the big one is coming up. I believe AMD is today after the market close. And Apple's coming up, I think May 4th. So in a couple of days. And a lot of earnings still, a lot of important earnings still on deck.
Actually, that one of those that is down, I think it's a CHGG, made comments, and I didn't read it, the earnings announcement, but it was spoken about quickly on CNBC that they are viewing AI as a threat already, maybe has taken some of their customers.
This one, CHGG, I think it's an educational company. They just reported earnings yesterday after market close, down 45%. And, right now, the AI technology is still not, growing so fast, that even in the last month, all of a sudden, I'm seeing all these new apps that are leveraging that technology. And that will be amazing. It'll probably be one of the most disruptive technologies we've had in a long time, and it's amazing, because we already have a lot of tools in place that could leverage that technology. So it's moving much faster than we've seen in the past. But definitely, I think that there's going to be lots of benefits, but probably, there are going to be business models that are going to become obsolete, and you'd have to kind of adapt to it and see how you could use that technology to benefit from it, and even we are looking at it ourselves and trying to, figure out how to use it, what are its capabilities, and, how can we improve our services for our customers. And, you know, I think a lot of big companies as well are starting to announce, I think even like IBM, you hear from a lot of these companies that are indicating that they're going to replace workers with what AI can, if AI can do the same job, then they're going to replace their workers with AI.
That could be a
So
problem.
it'll be interesting. Yeah, and it's hard to say how even in the short term or in the next year or two, what the economy, what kind of cycles the economy can go through, because there could be existing companies right now that have some kind of a competitive advantage, and this allows smaller companies, to create processes to even challenge the bigger companies. So it's not even obvious that, that which companies will be able to use it to increase productivity, and which companies may become obsolete. A lot of their businesses might become obsolete, or there could be lots of other competitors where they were insulated from before. But yeah, CGG down 45%. That's a big, it's a big gap down. Let me see. Oh, and Uber reported earnings, right? So there's Uber up 9%. That's another one that could definitely benefit from autonomous driving, and I think
and they've been in the AI space for almost since inception, right? They've been using technology around computer learning and ability to maximize the efficiency of data. So
yeah, well, and if you think about a lot of these big companies that had access to these types of models and this type of computing and this type of technology, Meta, Twitter, Google, Amazon, all of a sudden this technology is starting to become available on a wide scale, right? Those models, those learning models, are becoming available to lots of people. So what is that? How's that going to play out? Will be interesting.
Yeah, I mean, certainly the biggest company at risk in any company that revolves around Google. Google, I think there's been like 200 million downloads of the ChatGPT app.
Yeah.
It's the fastest, and they're basically, it's going right after Google's core business, right? Searches, trying to ask questions. And
certainly the ChatGPT, all of a sudden you could get your answers really quickly. You don't have to go to the websites and search for them.
Yeah,
but it's much more powerful.
Any website that has worked off Google pushing potential customers to them could be in real trouble, right?
Yeah. I mean, even helping you create content, marketing plans, ad copies, editing emails, all this stuff it's able to do. It could create code. It could read your code, and make suggestions. It's a very powerful tool. Something that it's almost, when you start using it, you can't even believe, that exists.
Rob actually mentioned, I think it was the head of, I think we've talked about this too, the head of Google's AI has recently left. he wrote a piece in the journal today about the
Yeah.
downsides of AI and the risks.
Right. Yeah. Which are with any technology, right? We've seen downsides. But yes, certainly right now, you could see a lot of benefits too, for sure. What were the downsides? Like,
Rob, let us know if the downsides. He just
Yeah.
mentioned that he wrote about the downside.
Yeah. Well, and Elon Musk did too, said, there should be regulation and there should be some kind of standard and like slow down the learning. Because right now they did kind of just make it available, pushed it out there, and there are always going to be people who are going to try to use it in a way to profit off it, but in a bad way, right? Or use it in a bad way instead of a good way. And I think that's part of what they're looking at. So let me go. If we don't have any questions, Will, I'll stay on Microsoft.
We did have one question, and actually Microsoft may be a good one to look at because it was mentioned in the question. William was asking, I noticed that major stocks are not offering, they're not weekly options past June 9th. Microsoft and Goldman Sachs, just for examples, is there a reason? I guess he's asking how is it decided that weekly options are added? I was only under the assumption it was added the week before, right? Or am I wrong?
The weekly options,
Yeah.
Well, they'll add it at the start of the week. But they're going looking at the demand, right? If there is a demand for weekly options in certain products, so they probably base it on requests and the volume. But that's up to one of the options exchanges has to list it, right? So they have to go in there and list those options, and you have to have market makers willing to make markets in it. You have to have the exchange listed, get it approved by the OCC, and so forth. So, I mean, I don't know exactly. I don't know if it's like an exact formula that when certain things hit, then they'll list weekly options, because it could be an exchange. We have lots of exchanges now. I don't know how many exchanges do we have. There were maybe 20 exchanges. If one of them decides that they want to list weekly options, they could apply for it and list weekly options. But usually you just see them in the stocks with the highest volume, right? Because those are where there's an indication of demand, and there's for trading. So that's probably where they're looking at stocks with highest volume. But I don't know, does he see one he thinks there should be a weekly option?
Well, he just mentioned Microsoft, and
I mean, I see Microsoft's May 5th, right? So
yeah, well, I think he says past June 9th. I'm wondering if William, correct me if I'm wrong, I'm wondering if you think that there should be options every week,
Oh, I see. He's like just weekly.
He's saying weekly options past June 9th is what he's saying.
I got you. Yeah, I don't even know how how they determine that. I don't know if there's like a formula, or they're just doing, the exchanges are looking at, if it meets certain volume thresholds.
It's probably customer demand too, right?
Customer demand, if they have customers requesting it. But I know what you mean now, because over here, we have a weekly, but there are also weekly options going out all the way out to, like you said, June 9th, and then they go to monthly. But
well, I'm not going to read the downsides, because I've done a quick search to see his downsides. It's not like the upside is, a better world for everyone, right? Which it's like the downside is like Terminator stuff. It's pretty scary to read, actually.
Yeah.
And the downside are, And he makes a good point. Now that Google's threatened, they're going to unleash the technology. You know, they've been very careful about what they've been doing with AI, but now that they're
Yeah.
threatened by Bing and Bing using
Yeah.
ChatGPT and OpenAI, they're going to let loose. And tech code creating code. He's really worried about
Yeah.
basically a really bad situation where he describes it as killer robots. So take that with whatever grain of salt you want to, but it's not a pleasant read.
Yeah. And what's with the Chat GPT is how quickly people can create apps on. We've seen like interesting technologies come out, but it usually takes time to, there's a learning curve and there's testing and adaptation. But here, people are using it and quickly being able to develop on it, or creating, using it to either increase their productivity, create new products or interesting things, find out interesting answers. So that the speed of which it's being adapted is incredible. Let me go back to, if we don't have questions, Will, we were on this price action analysis here. And we were talking about, I'll go back to yesterday with me first. So we're talking about the different trading sessions that are, stock goes through in a particular day. We have a pre-market, we have an opening auction, regular trading hours, closing cross, after hours. And then, each of these sessions can tell us something a little bit different, give us a little bit different insights, because there are certain traders, that trade in these sessions that, and there are certain traders that can't trade in these sessions. So in regular trading hours, we'll have all types of trading going on, and they all get meshed together in that process of price discovery. So, you have large VWAP orders handled throughout the day. You have stock buybacks that will happen throughout the day, also probably being VWAP. Options trades are getting hedged. So during the day, there's lots of options trades. Those are going to get hedged during regular trading hours. You have also lots of strategies and models that are trading. They're pegged. They're models that are pegged to things. Like a simple one would be like Microsoft pegged to whatever, a basket of goods or indexes, like a pairs trade. Also, so that's all happening during regular trading hours, but some of that you can't do in a pre-market or opening cross. So in the pre-market, options aren't trading. So you don't have, people buying and selling options and then offsetting risk based on that in a pre-market. You don't have pegged orders or VWAPs or so. So then you kind of get a glimpse of, well, what's going on with traders that are actively watching real-time information and news. And if you take out all the other models, how are they pricing the stock? And they're repricing the stock based on their models, their opinions, and where they think the stock might open and go the rest of the day. We do have the opening cross. I'll just review this quickly and then I'll go to the VWAP table. We have the opening cross, and that's another session, because in an opening cross, that's not based on somebody seeing an offer or a bid and trying to trade with it, right? So when we talk about, trades that are continuous, you see a market, a bid and offer, and you could go and trade on it. If you want to buy it and pay the offer, you can. If you want to sell the bid, you can. But an opening auction doesn't work that way. Opening auction is kind of an accumulation of bids or indications to buy and sell, and the specialist matches it up at one price. So if you're trading, if you're putting in an order to get filled at the open, well, you really don't know where that opening price until the specialist opens. You don't know what that price is. So it's not the same thing as going out there and seeing a market and trading on it. You're entering a buy order with your broker. They're sending that order to the listing exchange. You say, I want to buy it at the open. They're sending it to the listing exchange, and that listing exchange has a specialist. He has a book of an order book, and he'll match up those buys and sells and open it at one price, right? So it's a single price auction. That's what that is. And that's kind of the next indication of what people may be doing that can't participate in the pre-market or don't want to. And then we go into the regular trading hours. Everybody's competing there. The closing cross, that's also single price auction. So it's not the same thing as buying the offer, selling on a bid. You're not trading on continuous. It's not like trading on continuous quotes. You have to enter in that special order, buy on the close, sell on the close, and that specialist will match them up. And then you got the after hours. Okay, so it's important to understand the differences between these trading sessions, because it's not like we open up at 4 a.m. and trade to 8 p.m. and it's just continuous trading with everybody trading the same way, every trader type. It's not like that. Okay, there are major differences between each trading session, and you should know those differences and what type of insights that you could get from each one. Right. So let's go to trading hours. And you could see here, there are lots of trades going on during regular trading hours. That's where the biggest volume is. So you could see 17.5 million versus 200,000 in the pre-market, 300,000 opening cross. Closing cross, we'll usually have also a bigger volume than the opening, maybe the pre-market, and that's because institutions use that closing price, right? So a lot of institutions need to trade on the closing price, and you'll see that volume go up. We've discussed it. For instance, mutual funds that create and redeem units, they do it based on the net asset value, which is determined by closing price. So when they accumulate orders throughout the day, they may have to create or redeem units, and those get traded at the close. Then you got after hours trading, which is similar to pre-market. So that's from the top level, right? That's from the top level. And then we could go in there and kind of then break down the volume further. All right, so we see 17.5 million shares, regular trading hours. So then we could go, I'm going to come here, and this is still being developed. So what you're seeing today, this might change even this week. And what we do is then we break down the volume. The next thing we want to do is break down the volume into smaller time frames to kind of get an idea. Well, how did the stock trade and what's been going on in the smaller time frames? and maybe find some, interesting insights there. And here we have it laid out. I'm going to skip this one for now, but this is the number of trades in this minute. So this is a minute by minute VWAP. So we have the number of trades, the total volume in that minute. I'm going to skip this for now. This is the VWAP price. So the VWAP price is the volume weighted average price, which is what professional traders, institutions, that's what they tend to reference is the VWAP price, because you could have one trade, you could have this price here, 305.56, but if it's just 100 shares, that doesn't mean that much if only 100 shares traded at this single price when you had over, 20 million altogether shares. So this does not mean that much. So then we come down here. So we're referencing the VWAP price minute to minute. Then we have the change from minute to minute. All right, and this will become important too, but I'll come back to that. Then we have the highest price it traded at, the lowest price it traded at that minute. And then this is at the end of the minute, we capture the bid and offer. So this way we could compare the VWAP price to where did the stock close? Where was the bid and the offer at the end of that minute? And then we'll have some alerts here. And a couple things, we have 2 minutes, but we'll start going over this. Is in a particular minute, we could also, just like we broke down those trading sessions, in a particular minute, there could be something interesting there that we want to look further into. So I'm going to here show you a couple over here. I'm going to jump on these. These are what we calculate as burst trades. So I'm going to go to 1125. And a burst trade is the following, that in this particular minute, right, what we saw was a big spike in volume. So you could see how the volume minute by minute, it's in the 30s, jumps to the 50s, all of a sudden it goes to 130,000 and then jumps and comes back down. So basically something happened over here where all of a sudden, by our estimates, this is 2.6 standard deviation volume spike just in that minute alone. And what we see is that it did trade at 306.22. So that's the VWAP price. And what we see is that it traded on a downtick. So here's the previous VWAP price, 306.31. It dipped to 306.22, giving us an indication that there must have been more sellers than buyers pushing the price down lower. And we kind of see how it, it started picking up. It was down 20 cents, 18 cents. Then over here, finally, a big trade happened. So we put that as a sell burst. So we tag this as a big volume burst that looks like it's sold down from the previous VWAP price. Okay. It's at 9:30. I'll continue this. I'm going to continue this tomorrow. All right. But what we're going to do is go back into the VWAP table and start analyzing, important things that happen throughout the day to paint us a better picture of what we think is going on here. Okay.
All right, D. We did have a question from Rob. I'll send you about the VWAP. In the VWAP pre-market, the numbers on balance volume show up in green and red. What exactly does that relate to? Increase in volume, green, decrease red, something like that, he says.
Yeah. And that's so that this on balance volume, and we didn't create, this is a number out there that exists, a technical indicator we got a lot of requests for. But basically what this will do is say, did the VWAP price increase or decrease? So if it increased, what it says is all the volume in that minute was positive, being a buy. And what it will do is add to the on balance volume. If it was negative in a minute, it takes all the volume and subtracts from the previous on balance volume. So it's kind of a running total of the volume, going up or down. So there is more down volume than up volume. And that on balance volume, you could go and like Google it. That's this one out of all these this is just an indicator that exists out there that we added by request. The other ones, those are going to be our indicators.
Excellent, D. Great job as always, my friend.
Yep. All right, everyone. Thanks for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.